How's the real estate market? Hang on just a moment. I'll be happy to tell you. In preparing this video, I was kind of curious to know what was considered full employment. When is unemployment at acceptable levels? So I asked Bard. Bard told me that anything below 5% unemployment rate is considered full employment by most economists. That was great. So now I wanted to know what's the current unemployment rate. Now, Bard doesn't do graphics, all language, and I'm a very much a visual picture book kind of guy. So I went to the Federal Reserve site, and this is what they told me about unemployment. So I went and talked to Fred. Fred is the go-to person for economic data. Now, what we found out is that unemployment rate is below 4%. Wow, that's great. Unemployment below 4%. America is fully employed. Those that want a job can find a job. This is causing problems for the Federal Reserve. Jerome Powell and his buddies don't want full employment. They're trying to slow inflation, which means they've got to break the labor market, and they want to see unemployment go higher. This has got a problem. The fact this indicates to the 10-year Treasury market and the rest of the bond market that interest rates from the Fed are going to remain higher for longer, their words, not mine, and that's causing 10-year Treasury yields to go up. Now I know what you're thinking. I can already hear it. That's very interesting, Paul, but what's that got to do with anything? Well, when the 10-year Treasury goes up, mortgage interest rates tend to follow. Now here again, it's very tempting to look at the last two data points and say, but Paul, rates are falling. If you look over the last 30 days, rates have generally been increasing across all markets. Increasing housing rates make money more expensive, which makes housing more expensive, and that's a surefire way to kill demand. At the national level, real estate has been on a little bit of a downward trend. Depending on your point of view, this is good news or bad news. It just is. Seasonality? Maybe. But interest rates are not helping. At the county level, our real estate market index is holding at about 43, so over the 90-day average. So we're still pretty much in a seller's market. Thankfully, inventory is holding at least flat. Normally, with this kind of interest rate, I would expect to see it maybe grow a little bit. Possibly with the seasonality and everything else combined, it may start to dip down, but we're holding our own. That's good. List prices are continuing to rise just ever so slightly. However, as we're about to see, I don't think sellers are quite getting the message yet. One of the best indicators of demand is the number of properties going through a price reduction. We can see about 30% of the lower half of the market, those are properties priced below about 500,000, are going through having to reduce their prices to get their property sold. So the market is starting to balance out a little bit. So what does all of this mean for buyers and sellers? If you're thinking about buying a home in the near future, that would be a really good time to save cash and pay down debt. I don't think the Fed's going to lower interest rates anytime soon, not until we see a break in the job market. We're a long way from that happening so far. However, we do have strikes and walkouts and all kinds of things happening, so we'll have to see what's going to happen. It's going to be a very interesting winter, I think. For sellers, if you got your place lined up, now is the time to think seriously about getting it sold. And again, price your house just a little bit below, so you're not one of those people that are having to go through a price reduction and cause buyers to wonder what's wrong with the property. Now is not the time for sellers to get greedy. Do you have questions about the real estate market in your zip code or your neck of the woods? Maybe you have questions about the value of your house in today's crazy market. Looking to buy a house? Well, eventually we'll be able to get there. If you have questions, feel free to reach out to me by phone, by text, or by email. I respond to them all. Look forward to talking with you, and make it a great day.